Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. If you have questions or topics you wish to discuss, please chat those over. If you're finding this video to be helpful, please like this video. It helps us to get the word out to other solopreneurs just like you. Please subscribe to our channels, whether on LinkedIn, YouTube, X, Instagram, as we go live every day, and that'll give you notifications of when we go live. You can come and hear the content we want to share, plus ask any questions you might have. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Today, we're diving into one of the most exciting yet often complex investment opportunities out there, pre-IPO stock with your solo 401k. Why does it matter? Because if you're self-employed with a solo 401k, you have a unique advantage to potentially invest in high growth private companies like Stripe, unlocking significant wealth potential. Today, we're going to cover the pre-IPO access, navigating the landscape of private company investments, how to potentially invest in Stripe with your retirement funds, as well as cover some of the key considerations and risks in private market investing. Before we jump in, though, we've got some questions that were submitted up front, so we're not going to make you wait until the end. We'll knock out those questions, but if there are other questions on this topic or even unrelated topics, please don't hesitate to chat them over, and we'll take those sequentially. All right, so the first one is asking for a link to the community. Thank you so much. If you go to mysolo401k.net/my-community, you can easily find it. If you don't have access, please email us at business@mysolo401k.net and we'll get you access quickly. That was the first question regarding the community. Great question. We appreciate that. Okay, we've got over 30,000 members. We have a vibrant community with forums. We have a library of videos and webinars. We got the industry's first AI, which you're welcome to use at solo401k.ai. All right, so looking for next steps. Okay, so the next step is going to be, I see that you submitted the documents. Thank you so much. There's an email, or I'm sorry, there's a link in the email to let us know, the initial email where you got those documents. There's a link to let us know where you want to open up the accounts at. So I'll forward that to you now. Thank you so much for your business. We do appreciate it. So that it's a quick 1-minute questionnaire. You can tell us where you want to have the accounts at for your solo 401k. And that'll prompt us to, number one, go ahead and get the EIN number for the plan, as well as prepare the paperwork to open up the accounts at the bank or brokerage of choice. Okay, so please check your email box. Thank you so much. We appreciate it. All right, next question. I have a PLLC, which was my sole source of income for 8 years, but currently has not been doing active business for the past 2 years. I may start doing business under it again at some point in the future, but I'm not sure. I have not made any contributions since I stopped receiving self-employment income. Can I leave my solo 401k plan open with no continuing contributions as long as I don't dissolve the PLLC? The company is still in good standing with the Secretary of State. So great question. It does depend on the facts and circumstances. So of course, in order to be able to maintain a solo 401k, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by the individual or a spouse, if any. So if the individual has an entity through which they operate their self-employment activity, doesn't have any employees working, again, for any business owned by such person or a spouse, if any, they can set up a solo 401k. Now, there is technically no minimum amount of earned self-employment income that they need to report in order to be eligible. So there's no minimum contributions either. So as long as that entity continues to exist, as mentioned, it's still in good standing. Essentially, the individual is still pursuing the self-employment activity, even if it's essentially really decreased in terms of the actual income being generated, but they're still essentially open to it. They're still keeping it open, as mentioned. It would be reasonable to continue to maintain the solo 401k. Now, they're not going to be able to, of course, make any contributions because they don't have any income to justify it. But then as the business comes back to generating positive income, then they could use that as a basis to make contributions. So in short, it would be reasonable. Essentially, it would go into a freeze status. Now, if that entity was shut down, the entity through which they operate their business and sponsors the solo 401k, and they don't have any other basis of self-employment activity, right? They're not, say, setting up a different entity or even acting as a sole proprietor for some other self-employment activity, and the entity that sponsors the plan is wound down, then the expectation is that the plan, which is sponsored by that entity that's being wound down, would likewise be wound down and the assets transferred over to an IRA. Hopefully that helps. All right, let's go back to the topic, which again is how to invest in Stripe pre-IPO stock. And if there's questions on this topic or other topics, please don't hesitate to chat them over. So let's first lay the foundation with the power of your solo 401k. What is a solo 401k? Well, it's a plan that's designed for self-employed individuals with no full-time W-2 employees other than a spouse. It's available for sole proprietorships, LLCs, partnerships, C Corps, S Corps. In other words, regardless of how your self-employed business might be organized, you're going to be eligible to set up a solo 401k as long as you're reporting earned self-employment activity with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. And a solo 401k is very powerful. And then a truly self-directed solo 401k, like the one that's offered by my solo 401k Financial, is the most powerful. So why is that? Well, number one, a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. For example, for 2025, the overall limit is $70,000 or even more if you're age 50 or older. So that's 10 times what you could contribute, for example, to an IRA. Moreover, a solo 401k plan like the one offered by my solo 401k Financial is going to allow for tax diversification. In other words, you can make both pre-tax contributions to reduce your taxable income now for the year for which you're making the contribution, as well as Roth and even mega backdoor Roth contributions, which allow for the potential for tax-free growth. Some clients choose to do all pre-tax, others do all Roth and mega backdoor Roth. Some do a mixture to diversify from a tax perspective. Our plan also allows for diversification from an investment perspective, because not only does it allow for traditional brokerage type investments like stocks, bonds, mutual funds, as well as true alternative investments such as real estate, crypto, private placements, private equity like Stripe stock. So now let's drill down. Now that we've laid the foundation, let's start to drill down into those alternative investments. So you need to have a plan that allows for those alternative investments. So really a plan is a legal entity. It's the documents that create it. So our plan documents, which are approved by the IRS, do allow for these alternative investments. Now, of course, you're still going to have to follow the investment rules. So for example, there's no self-dealing that's allowed. The funds must be for investment, not personal benefit purposes. Some of the key prohibitions are personal use of plan assets. For example, vacationing in a real estate rental property owned by your solo 401k. Investing in companies that you or family members own. Buying collectibles. Investing in collectibles is not allowed. Investing in S corporation stock. And that's because of the S corporation rules, which wouldn't allow a holder of S corporation stock to be a 401k plan. Ultimately, compliance is paramount. All investment related expenses are paid from the solo 401k. Once the value of the assets exceeds $250,000, there's going to be an informational filing requirement. The name of that filing form, or that form that needs to be filed, is Form 5500 EZ. Now, we handle that as an optional free service for our customers. In other words, no additional charge. They just have to let us know once the value exceeds $250,000 so that we can add them to our queue of plans for which we need to prepare the 5500 EZ. Ultimately, this is important because non-compliance can lead to plan disqualification and taxation. So in other words, losing these benefits. So when it comes to investing in pre-IPO stock, there are certain marketplaces like Forge Global, which provide the opportunity to invest in pre-IPO stock, private companies like Stripe. Essentially, they're connecting buyers and sellers. Now, an important prerequisite is that the solo 401k owner needs to be an accredited investor. And there's different ways to qualify as an accredited investor. But typically, in our experience, it's either based on your income or net worth. This is going to be required for all private securities transactions on Forge. So the mechanics would be opening an account under the name and EIN number of the plan, which we obtain an EIN number as part of our onboarding process. This is different than the EIN number that the individual might have for their self-employed business. So it's an EIN number that's specific to the solo 401k. And then, of course, qualifying as an accredited investor. So opening and funding that account at Forge. For example, as part of the onboarding process, we help customers open up an account at the bank or brokerage of choice. Then they could transfer funds from the bank or brokerage account for their solo 401k to the account at Forge that's likewise opened under the name and EIN number of the plan. In terms of some of the additional details, when it comes to investing in pre-IPO stock on Forge Global, their typical minimum investment is $100,000. However, if someone's investing via a special purpose vehicle, those minimums can come down significantly. But the trade-off is higher fees. So typical direct secondary fees are 2 to 4%, whereas investing via an SPV is going to require higher fees typically, for example, up to 5% or more. Ultimately, of course, you want to confirm the exact fees for your specific investment. Additional considerations are that there may be company approval required. For example, by Stripe, there may be requirements that apply to that special purpose vehicle. In terms of the timeline, the average based on experience and client feedback is around 50 days from offer to close. But having those company approvals or right of first refusals can certainly extend this up to maybe even several months. Now let's turn to the key considerations and risks in private market investing. Well, of course, number one is going to be illiquidity and long holding periods. Right? Contrast investing in pre-IPO stock with investing in publicly available stock, for example, that's traded on a stock exchange. If the stock is traded on a stock exchange, one of the benefits and features is the ability to quickly buy and sell the stock. Whereas with pre-IPO stock, there may be much longer holding times where your capital is tied up for months. Another key consideration and risk is the volatility when it comes to valuation, and related to that, the lack of transparency. And again, this is because this is investing in a private company, which have fewer public disclosure obligations, which is going to necessitate thorough due diligence. When it comes to investing in pre-IPO stock as well, the valuations may fluctuate based on market demand, company performance, funding rounds. And again, don't forget about the possibility for company approval and transfer restrictions. Companies retain significant control, including these right of first refusals and board approval for transfers. These right of first refusals can alter the counterparty or delay the transaction. All right, thank you so much for joining today. Again, if you found this to be helpful, please like this video to help us spread the word. Of course, you're welcome to join our community. It's all are welcome. It's free to join. You can find our community at mysolo401k.net/my community. Just shoot us an email at business@mysolo401k.net and we'll get you access. We'll give it a moment to see if any additional questions come in. We definitely appreciate the engagement. Again, we encourage you to subscribe, whether on YouTube or Instagram, LinkedIn, X. as we do go live every day. And so it's a great way to find out what we're talking about on a daily basis, as well as join if you have questions. All right, well, that appears to be it for today. Again, thank you so much for the participation. Until next time.